All right, you guys, I'm glad to have you guys with us tonight at 6:30 on a Thursday for a presentation on LLC planning for rental properties. Let's go ahead and get started. So, just a few housekeeping items for right now. Please feel free to submit your questions via the chat or message function in Zoom. We're recording this presentation for you guys. So if you miss anything or you want to watch it again, we should be posting it to our YouTube channel a day or so after this. Please go ahead and mute your microphone if you've got a lot of background noise, because with a lot of people in the meeting, and I'm happy to have you guys, but with a lot of background noise in the meeting, there'll be a lot of crosstalk, so it'll be hard to follow. Okay, some necessary disclaimers, you guys. This presentation does not create any attorney-client privilege, and really the information in this presentation really is general in nature. We just cannot cover every single exception and a lot of the circumstances that will apply specifically to you. So please, if you've got any specific questions for your specific case, please feel free to contact us at a law firm. Our law firm-wide email address is right there, info@tcvlaw.com, so we can give you advice for your specific case. Let me tell you a little bit about our law firm if you don't know us already. We're the Thrash, Carroll, and Vanway Law Group. You've got our contact information right there. I'm really happy to say, between all the lawyers here at the firm, we've got 125 years of experience. And our specialties are, you may already know this, estate planning, asset protection, which is what we'll mostly be talking about tonight, and trust, estate, and probate administration. Just a little bit about myself. You got a little bit of my credentials right there. Where I kind of fit into the firm is I'm usually the guy at the firm who does the trust and estate administration. You know, what happens to your trust or your estate after you pass away? You know, who's the executor, who's the trustee, and what do they do? But tonight we'll be talking about LLCs and rental properties. So here is our overview for tonight. I think we've got about 59 slides for an hour. I'm hoping we will get through 1 through 4 about the LLCs and the series LLCs. I'm not sure we're going to get to the income tax items here on the to-do list, but let's see. Let's see where we get. Okay, because asset protection is such a big topic with so many little sub-items right here, there are just a lot of things that we can't talk about tonight. For example, self-settled asset protection trusts, and a lot of the entities that you'll see on Google or on the internet, they talk about Delaware corporations and foreign corporations, and we just can't cover that stuff tonight. So let's hop into our first item. You know, how is owning a rental property different versus owning a rental property in your sole name? So here is kind of an overview of what we'll be covering today. Let me kind of break down this chart for you, because I know there's a lot of stuff going on here. This first column right here, I don't know if you can see my cursor. This first column right here is about what is it like to own a rental property just in your sole name, or say with your spouse, right? It's in your personal name or you and your spouse together, versus owning a rental property in the name of an LLC for yourself. So these first two items, who signs the rental property and who signs if the owner is disabled or deceased, we're about to cover these items. These two items right here, this is one of the benefits of an LLC that we don't often talk about. We often talk about an LLC giving you a lot of asset protection, and we're definitely going to cover that. And a lot of times you'll see on the internet, people talk about LLCs giving you good income tax consequences. But one of the unsung benefits of having an LLC is that gives you a management plan if one of your owners becomes disabled or is deceased. So we'll cover that soon. So here's our overview. So, okay, let's get to nuts and bolts here. First of all, if I want an LLC, how do I create it? How do I manage it? You know, we've got a series of questions right here on the left side, so let's go through it. how do I set up an LLC? How do I actually bring it into existence? Typically you start with an attorney. Your attorney helps you draft the LLC document so that you've got a document that says, what is this LLC, who runs it, and how is it supposed to be managed? That's the company agreement. And then you file certain paperwork. Your attorney usually does it for you that says, okay, we want to create the LLC and we want the Secretary of State of the state of Texas to bless it into existence. Now, once the Texas Secretary of State says, yep, looks good to me, here's your certificate of formation, the CPA, you usually hire a CPA. At the point that you're running a rental property, it's often a good idea to have a CPA because the CPA will remind you to file your annual Texas franchise tax return. The reason that is important is because if you fail to file the Texas franchise tax return on time, your entity will no longer provide you any of the asset protection you were expecting to get. Typically, it's a good idea to have a bookkeeper too, because the bookkeeper helps maintain that profit and loss statement for your rental property. And one of the other benefits of having the bookkeeper is that you've got a paper trail that documents that the LLC and its rental property is separate from you. One of the big reasons we have an LLC is to establish its assets and liabilities are separate from you. And the way that we establish that is with records. So having a bookkeeper keep separate books for you versus the LLC is very compelling evidence in a lawsuit. And then finally, we got the bank. You definitely want your LLC's checking account to be separate from you. We talked about the Secretary of State, talked about the IRS, and then finally, one of the things that is usually not addressed when you have an LLC generated by software on the internet is that you've got to get the assets that you want to be protected in the LLC into the name of the LLC. So if you do not deed your rental property into the name of the LLC doesn't own it. If the LLC doesn't own it, the LLC cannot protect you and that asset from lawsuits. So that's some of the nuts and bolts items that you've got with an LLC. So, okay, let's head into the next question. How does an LLC sign for, say, a loan or for closing for real estate? Okay, so got a chart here. Let me give you the layout of the chart. Right here on this first column right here, we've got how does the LLC work when you've got a sole owner or a sole proprietor versus this column right here, our next column, where the rental property is in the name of the LLC. So one of the unsung benefits of an LLC is that it can continue to be managed and it can continue to operate even if one of the owners of the LLC dies. So let me give you a compare and a contrast. Situation one, you own an LLC in your individual name. So far, so good. No problem, right? You sign for it. You make decisions for it. If you want to sell it, you want to buy rental property, you want to refinance it, you're the one who signs for it. But now let's stress test this a little bit. What if you're the sole owner and you are disabled? Who can sign for your rental property if you're in the hospital after a car accident and you cannot communicate what you want? Well, that's a problem. Typically, the title company will say, well, hey, you want to sell this real estate, but the owner is in the hospital. How are we supposed to agree to the sale? Common solution is hopefully there's a durable power of attorney out there that says, if I'm disabled, my spouse can sign for me. Hopefully we've got that. That's typically what you get in a full estate planning package. Let's look at another scenario. What if the owner is deceased? Let's say you own a rental property and then you die, and then you want to get it sold, but the title company is going to ask, well, where's the owner? And you say, well, he's deceased. Here's his will, though. His will says I can sign for him. You know what the title company is going to tell you? They're going to say, well, how do we know that will is real? How do we know it's legitimate? Some guy could have just gone to FedEx Kinko's and forged a will. With the color copiers we've got nowadays, that could easily be done. So typically in that case, if the owner of the rental property is deceased, oftentimes a title company will say, look, we need to see some sort of judge's order, some sort of court documentation that says this person can sign for the deceased person's real estate. So you can see in cases disability or the owner becoming deceased, there's a question about whether your rental property gets locked up or not. With an LLC, it works differently. An LLC document that's well drafted almost will always say, if the managing member, if something happens to the managing member, here's the next managing member. Everything is not supposed to grind to a halt. What you do is you say, okay, Article 7 of the company agreement says, if my managing member is deceased or disabled, there is somebody else, or there's some sort of process for finding a new managing member. You present that paperwork to the bank or the title company, and they say, oh, okay, yeah, no problem. Looks good to us. You can sign. You do not need to produce for us a durable power of attorney. You do not need to produce for us a judge's signature. We will take the meeting minutes from the LLC. So that's one of the big benefits of having an LLC above and beyond income taxes and asset protection. Okay, I know that was a little abstract. Let me give you concrete examples. I bet you guys didn't know I was going to ask you guys some questions. So here's our first question. JR and Sue Ellen, husband and wife, own a rental property jointly as community property. They say, you know what, it's time to sell this thing. Let's let it go. JR dies before the contract for sale of the property is signed. Can Sue Ellen sign for the sale of the rental property? Why or why not? Tell me what you think in the chat below. Okay, I've got a no and I've got a yes and I've got a no. No, because it is not under an LLC title. I got a yes. Yes, since it is community property. I got a no. They co-own it. I really appreciate your answers, you guys. This is really helpful to me. Okay, I'm going to give everyone else a little bit more time to answer. I'm really interested to see what everybody thinks. Any more brave answers? I love to see your answers. Okay, in this case, the answer is, and I think Margaret, I see your answer, it's community property. Here's the way that the state of Texas thinks about it. It's community property, right? They bought it as husband and wife. They didn't have any sort of separate property agreement, so it defaults to community property. The title company is going to say, because there's a buyer involved, right? And the buyer wants to get title insurance on the sale. So the title company is going to check the deed records and they're going to say, oh, the most recent deed in the Travis County records is Sue Ellen and JR own this thing. Sue Ellen, you can obviously sign for your half. You are here, you can sign for it. If JR is dead, you can't sign for it, right? Because what Sue Ellen is going to do is she's almost certainly going to have a death certificate for her husband. She probably has a will signed by JR that says everything goes to her. But here's the title company's concern. How do I know you did not just fake that will? Because I don't know you from Kane, right? You could just be some guy off the street. So they're almost certainly going to ask, hey, we need to see a judge's signature before we let you sign for a dead person, right? We need to be sure. So that's our first example right there. Extra credit question. So we know that right now, based on these facts, Sue Ellen needs to get a judge's signature before she can sign for her deceased husband's share of the property. Extra credit. Does the answer change if Sue Ellen has a power of attorney to act for JR? Does your answer change if Sue Ellen has a power of attorney to act for her deceased husband, JR? I see a no. I see a yes. I see a yes POA. I think the POA ends at JR's death. I see a no. I see a yes. I love your answers, you guys. This is really good. I'm really glad that you're giving me input right here. This is a trick question. This is a mean question because we're not really talking about probate in this presentation, but I wanted to show you how an LLC helps. In this case, double A, you had the answer right there. The POA ceases to be effective when JR dies. It's not useful anymore. The POA is only effective for someone who is alive. That was a great answer. Okay, I'm going to stop asking you trick questions, you guys. Let's go to another example. Okay, new question. The owner of the rental property is Ewing Rentals LLC. It is an entity in good standing with the state of Texas. The sole owner of the LLC is J.R. Ewing. However, the LLC is well drafted and it says, I have two managing members. J.R. or Sue Ellen can sign for the LLC. They don't need the signature of the other. That's what the or is trying to get at. J.R. dies mysteriously. Can Sue Ellen sign for the sale of the rental property as managing member for Ewing Rentals LLC? What do you guys think? Can Sue Ellen sign for the sale of the rental property as managing member for Ewing Rentals LLC? I've got a yes. I've got a yes. I've got a yes. I got another yes. Oh, you guys are going to take my job from me. Yes. You guys are all telling me yes. Yes, that's the exact right answer, right? Because here's the difference. Ewing Rentals LLC is an entity that is separate from JR and separate from Sue Ellen. They sign for the entity, but the entity continues to live without them. So even though JR died, because we have an LLC governing document that says JR or Sue Ellen is the managing member that can sign, you're good to go. Sue Ellen can sign for the sale of rental property. So very good, you guys. Thank you. Okay, let's go to the next one. Here is what a lot of you guys are here for, I think. How does an LLC shield assets? And what does this talk about piercing the corporate veil you might see on Google? Okay, so let's do a baseline case here. What asset protection do I get in the state of Texas that doesn't cost me anything? What baseline protection do I get? So let's look at this column right here. Texas, a nice thing in Texas is that your current wages are exempt from garnishment. So in other states, you hear horror stories about creditors getting default judgments against people and then filing paperwork to garnish their wages. That's terrible. Texas doesn't let you do that. There are some exceptions like child support, but generally speaking, your current wages are protected in Texas. Your retirement accounts are typically protected in Texas. That's like your 401k account, your traditional IRA, your Roth IRA. You've got a big allocation for protection of your personal property. That's home furnishings, jewelry, your motor vehicle. There are like little limitations inside there, but generally speaking, you've got a big allowance to protect your personal property. There are exceptions. For example, for a car is the common example. If you get a lien against your car and you fail to make payments on the car, well, they've got a lien on it. So it doesn't matter in this case because the lien says, if you fail to pay us, we will repossess the car. There you go. The big thing that a lot of states are jealous of us here in Texas is that our homestead exemption doesn't have a value limitation. It's just based on acreage. And if you got a rural homestead, you can have a really big homestead. You got the same exceptions here. If there's a lien or a mortgage on it, they can foreclose on the property. Property taxes can cause your property to be sold to pay those things. But generally, your homestead is protected from creditors. But here are the things we really care about right here. What is the stuff that's not protected by default under the Texas Property Code? Your rental properties are not protected. The cash in your checking and savings accounts are not protected. The investments outside of your retirement accounts are not protected. We're talking about, say, your Fidelity, Schwab, TD Ameritrade, normal non-retirement accounts. Those things can be seized by creditors in Texas. Okay, I know that was abstract. Let's do an example. Client is sued. She's got a rental property that's not in her LLC. Let's go through each of these items below, and I'm going to ask you, can this property be seized? Let's say the creditor goes to the cash and the personal checking account. Can that be seized? What do you guys think? I see a yes. I see a yes. Yes. Yeah. You got all three of you guys are exactly right. Right? Cash just sitting alone and checking your savings account, not protected. What about client's homestead? Can client's homestead be sued in a typical lawsuit that does not involve a mortgage or property taxes? I see a no. I see a no. I see a no. I see another no. Exactly, right? Absent strange circumstances like a mortgage or failure to pay property taxes, your homestead's looking pretty good in Texas. What about a mutual fund in the client's 401k account? Your client has a mutual fund in a 401k and the creditor tries to seize it. Can they get it? I see a no. I see another no. You guys are exactly right. And here's what I was trying to get at here. It's a 401k plan. It's a retirement plan. So as a general rule in Texas, your retirement accounts are protected from seizure by typical creditors. Let's do a different thing. What if it's a mutual fund in just a personal account? It's not a retirement account. I see a yes, it can be seized. I see a yes. Do I got another answer? I'm greedy. I love to see you guys answer. Yeah, definitely. So mutual funds in a personal account. Oh, okay. So I see a question about, is a trust protected? That's a very good question. I'm afraid for purpose of this presentation, that's outside the scope. As a general rule, the typical trust that you see for estate planning, a revocable living trust, that by itself does not generate asset protection. Your typical revocable living trust that you see for estate planning, typically not protected. I see a question about family limited partnerships. My friend, you were asking very advanced questions outside the scope, but please feel free to send us an email. Otherwise, I'd answer you just because we got too many slides. Thank you for the question. And then the last question on the slide is, what if your client has rental property in her own name? Can that rental property be seized by her, from her by a creditor? I see a yes. I see a yes. I see a yes. Yes, that's probably why a lot of us are here tonight, right? We know that rental properties by themselves are exposed to seizure by creditors. So we want to do something about that. Very good. I'm really glad to see all your answers. Okay, so the next question you might ask is, well, what about my landlord insurance, right? Because if a lot of you guys got a mortgage to buy your rental property, a lot of times the bank, if it knows what it's doing, is going to demand that you buy landlord insurance. Makes perfect sense. You know, on this column right here on the left, you see some of the common coverages you see with an insurance policy for a landlord, right? You got coverage for the building, coverage for business liability, and the F is the one that is really important. Medical payments to others, say for a slip and fall. What I really want to highlight here is, I want to jump over here to the right column right here. I don't know who told me this. I think it was an insurance specialist, and he told me when you're reading an insurance policy, the thing that really matters are the exclusions. The insurance company is a for-profit business, and given the choice, if it doesn't have to pay a claim, it won't. And so we've got this kind of the common exclusions here. You know, the typical policy will have limitations. It will say, we will only cover you up to $100,000, $200,000. There will also typically be deductibles. I think those of you guys who have busted pipes, I'm sorry. You're about to experience those. And then oftentimes, certain things are just flat out excluded, no matter how much coverage you have. Say flooding is a common exclusion for property insurance. Now, let's go to these next coverages, which are really more related to owning a rental property. A lot of times they will say, if you did something that triggers punitive damages, that's not covered. And the related insurance costs are not covered. If you do anything that the insurance company says, I think you broke the law, I think you broke a local ordinance, we're not going to cover that. In certain circumstances, certain classes of people, they will not pay. In one policy I looked at, they said, we won't pay injuries to independent contractors. We just won't pay those. And then a lot of times, if there's an injury that you want to get covered, someone comes into your property, slip and fall, right? And they sued you, and then you want the insurance company to cover you. They're going to say, the injury must have been related to your rental property in some way. So what I'm trying to get at is landlord's insurance policy, I think, is really good. I think you should definitely have it, but it may not be enough for all cases. And let me give you an example. Dave is sued for professional malpractice unrelated to his rental property. Sued for professional malpractice unrelated to his rental property. Is the lawsuit covered by Dave's landlord policy? What do you guys think? Will his landlord policy protect him in this case? I gotta know. I got another no. I got another. You guys are crushing it. Yes, very good, right? Because this is a professional malpractice claim. It has nothing to do with his rental policy. So the creditor is just going to say, you know what? Your insurance policy is not going to pay me, so I'm going to go after that rental property. Here is another one that concerns a lot of our clients. You're just driving down 620, right? You're just minding your own business. You get into a fender bender with some corporate executive who makes $1 million a year. He complains he's got, he's got tightness in his neck. And he says, I can't work. I'm going to sue you for lost wages. Is this auto accident covered by Dave's landlord policy? Is Dave's landlord policy going to protect him? I got to know. I got to know. Do I got another answer? I got another no. Thank you, you guys. I really appreciate your answers. Yeah, definitely, right? The car accident is not related to the rental property in any way. So in this case, I like that explanation, Bernadette. Very good. So it's not really related to that's a good exception, Bernadette. In this case, it's not related to the rental property at all. So in this case, the insurance company is going to say, this has nothing to do with us. We're not going to hire an attorney to protect you, and we're not going to pay money if the judgment is effective against you. So you see, in some cases, landlord insurance policy, while very good and strongly encouraged, may not help. So let's go to the next level. So we've got a rental property, and we've got it with property insurance, but we know the property insurance will not cover everything. So here is how an LLC protects you. Here's the lingo in Texas on how it protects you. A charging order is the sole remedy a judgment creditor can use against an LLC owner. And you go, Chris, okay, what does that mean in English? A charging order means that the creditor does not have access to the LLC's assets. The creditor cannot force you to withdraw money from your LLC. The creditor cannot force you to sell property inside the LLC. The creditor's only recourse is to say, if he's got a charging order against you, is to say, okay, if you authorize distributions from your LLC, then I can seize the distributions that you are entitled to receive. What the LLC operator is going to do there is say, well, wait a second. So you can't force me to sell property. You can't make me vote my shares. And you cannot make me authorize a distribution. Huh, okay, so I will never authorize a distribution, and I'm just going to wait for you to go away before I authorize any distributions. And so that's right there in the Texas Business Organizations Code. And that is why the LLC in Texas has, a pretty good deterrent effect against a lot of plaintiffs, because your typical plaintiff, what they really want to do is they don't want to try to fight an LLC. What they'd really like to do is just find an insurance company that says, hey, cut us a check and we'll settle. And that way they can go to the next insurance company and start working on the next case. The more they have to spend time trying to crack an LLC is less time they're making money. So that's really the asset protection benefit of an LLC. It's like a turtle shell that's really hard to crack. So let's do an example, because I know that's a little abstract. Example, tenant gets a charging order against the owner of an LLC. Let's call him the dude. The LLC has two assets. The LLC has a $10,000 LLC checking account, and it's got a rental property that is in the name of the LLC, so it's properly set up. Assume this is the sort of claim where the landlord policy just says, we're not going to cover anything. We're not going to pay. Can this tenant who is suing you reach the cash in the LLC? Can the tenant who is suing reach the cash in the LLC with the charging order that it got? I see a no. I see a no. Two very brave answers. I really appreciate your answers. I see a yes. Bernadette, that's a great answer. Probably, who knows? I congratulate. I like that one. In this case, what I'm trying to get to is the answer is no. And the reason that the tenant cannot get to the cash of the LLC is because all it has is a charging order. And the charging order only lets the tenant say, if the LLC makes a distribution, I can seize that distribution. But can I reach into the LLC and grab the cash? No. Can I reach into the LLC and grab the rental property? No. I can't do that. I cannot force or change how the LLC itself is managed. All I can do is wait for a distribution that I can seize. So the next question is, can the tenant vote the owner's LLC interest and force a distribution? Hey, wait a second. Well, if I can't reach into the LLC, can I force the owner to vote distributions which I can seize? What do you guys think? I see a no. Very brave answer. I see a no, another brave answer. Appreciate that. I see a no. Bernadette, I see your no. I like it. In this case, no. With a charging order, all you can do as a plaintiff, if you get a charging order, is you can wait for distributions. You cannot force the LLC owner to vote his controlling interest in the LLC one way or another. That's not what a charging order lets you do. So when you read this as an LLC owner, I hope it warms your heart a little bit. I hope it makes you feel a little bit better, because basically you've got a way to, excuse my football analogy, you just stiff arm a creditor if the only thing they've got is a charging order. And we know from the Texas Business Organizations Code that it says that is the exclusive remedy against the ownership interest of an LLC. So sounds pretty good so far, but I gotta tell you, there's always an exception, and that's why people hate lawyers. Big smile. But I'm gonna tell you what that exception is and how it works. So let's keep going. So let's do section 3.2. You might have heard about piercing the corporate veil. Piercing the corporate veil when you read about LLCs on Google. So the general rule is that a charging order is the sole remedy against an LLC member. What does a charging order mean? The creditor is limited to waiting to get LLC distributions. The creditor cannot reach into the LLC and seize the cash. The creditor cannot reach into the LLC and grab the rental property. If the LLC owner knows, hey, there's a charging order against my LLC interest, you know what I'm going to do? First of all, I'm not going to authorize any LLC distributions because I know they're just going to be seized from me. Why would I do that? And depending on the legal counsel he gets, he might decide, you know what? The way to get cash out of this LLC is to pay myself a salary because that's not counted as an LLC distribution, and that goes to me. So as you might guess, the plaintiff is not very happy with this result. Plaintiff is not excited about this result at all, right? Because the plaintiff wants to get the cash and the plaintiff wants to get the rental property inside the LLC. So the plaintiff is going to say, well, I don't want a charging order. I'm not interested in that. How about this? How about we get a judge to find that the LLC is just a sham so we can reach an LLC member's personal assets like their investment account and not worry about this charging order business at all. So when you do this sort of attack, the fancy word for it is called piercing the corporate veil. And that means the LLC protection is completely ignored. It's like it doesn't exist. And then the LLC owner's personal assets are exposed to seizure. So the whole discussion about the charging order doesn't matter anymore. So it used to be that this was oh, wait, I've got another slide. This is abstract. Let me give you a diagram. Piercing the corporate veil. Let's use a contract as an example. Let me start you over here on the left side, okay? Let's say you hire a building contractor to renovate your rental property, right? Let's say there's a dispute about the quality of the work. Your argument is that the contractor made your rental property worse than it was when you started. Building contractor says, no, that's not the case. I want you to pay me. So here is kind of the decision tree for the contractor, right? Who's suing you as the LLC owner. In this case, let's say the LLC is managed in such a way that, the rental property does not have a lot of equity in it because it's already got a mortgage against it, right? So he doesn't really want to force you to foreclose on the rental property because he goes, there's not going to be a lot of cash after the mortgage is paid. And then the LLC's other asset is a checking account, which has $5 in it. So he goes, I don't want to get that. So he goes, So if the LLC doesn't really have any assets, and this is the way a lot of rental properties are managed because some owners decide, I don't want to leave a lot of property in the LLC, right? I want to siphon it off. Then the creditor goes, if the LLC is not holding a lot of assets, how about I just go after the LLC owner's personal assets? What if she's got a big savings account with a bunch of CDs and municipal bonds or their own personal investment account? So in this example, the building contractor looks at the rental property insurance, but we're going to say in this case, the rental property insurance just doesn't pay anything. Then he considers over here on this box, what if I get a charging order against the owner's LLC interest? Well, I'm not interested in that either, right? Because the LLC doesn't really own that much anyway. And the LLC owner is not going to authorize any distributions anyway. So here's what I'm going to do. How about I just order the court, this LLC is a sham. It's not real. I want you to disregard it so I can seize the LLC owner's personal assets. I don't know about you guys, but that sounds like a nightmare. I don't like that. That does not make me feel better at night. So I'm happy to report that Texas legislature is sympathetic to this. So it used to be that a lot of the veil piercing rules were governed by common law, that it was just a bunch of court cases and there wasn't a statute that really governed it. We now have statutory authority under the Texas Business Organizations Code. There are general rules. I'm sorry, you guys. And then there are exceptions. Let me walk you guys through the general rules. So the general rule that we expect is that an LLC owner is not liable for the LLC's contractual obligations. It's one thing for the LLC to owe money to the contractor, but the LLC is separate from you, right? The LLC is not you. You are two separate people. So just because the LLC owes money to the contractor doesn't mean you owe money to the contractor. That's the general rule. The other general rule, and there's an exception. That's why I've got these 3 asterisks right here. The general rule is that if you fail to follow LLC formalities, then that alone, and there's asterisks here. We're going to get to the asterisks. Failure to follow LLC formalities alone is not enough to pierce the LLC veil. I think they've got this statute here because if you look at the common law cases in a lot of other states, this is what the litigation attorneys are telling me, is that the rules are different in other states. So we've got this nice bright line rule here. So here's the asterisk. Excuse me. However, little I, little 1, little 2, if a member uses an LLC to commit fraud, and little 2, the fraud primarily benefits the member committing the fraud, a court may allow veil piercing. Okay. Full disclosure, I spent 8 years working as an accountant, and I do not like that ambiguity at all. Excuse me, hold on a sec. Excuse me, guys. May be allowed on a case-by-case basis. What does that mean, Chris? I thought you were trying to help me. So I'm going to try to give you more concrete examples. So we've got 2 little requirements to break a veil, right? Remember, the general rule is that the LLC is separate from you. They're separate things. The contractor cannot just sue you because his claim is against the LLC. He's got to prove certain things to pierce the corporate veil. Remember those 2 little things. Little 1, he's got to prove you committed fraud, and little 2, the fraud was primarily benefiting you, the person who's committing the fraud. I tried to find some specific guidance. Here's the guidance from the litigator articles. Typically, what the courts are going to look at is they're going to look at certain factors. No one particular factor is controlling, but if you've got enough of these factors, or the factors are really bad, or the story looks really terrible, then, the judge will say, I think this amounts to fraud that was benefiting the LLC member, so I'm going to allow veil piercing. Those factors are, and I know this is maddening, was the LLC run like a sham? Were the formalities of the LLC being ignored? I know we said before, I'm sorry, you guys, this is maddening. You may accuse me of being an attorney. I apologize. I know we said before in the statute earlier, failure to follow formalities alone is not enough to break the LLC. But what we're saying here, it is a factor that the courts evaluate in deciding whether there's fraud that allows breaching of the LLC. The other things that come up, is money just flowing willy-nilly? Is there any documentation for what's going on? Is LLC cash not being used for LLC purposes? Excuse me. And finally, if there's transactions that look kind of funny on paper, can the member reasonably explain what's going on? Okay, if you guys are like me, when I first learned about these rules, you go, Chris, come on, you did not help me. You're making it worse. Okay, real examples, I promise. Next slide. Example number 1, Peter and Paul, co-members in one LLC. So they're co-members in a starting LLC. Paul has a separate struggling LLC that's not involved with Peter. It's just Paul's LLC, so it's completely separate. Paul lies to Peter, steals money from the joint LLC to shore up Paul's failing LLC. So he steals money from Paul, deposits it into another LLC that doesn't help Paul at all, and he lies about it. Can Peter pierce the corporate veil and reach Paul's personal assets for this lying and stealing? What do you guys think? Remember, we've got two little factors here. There needs to be fraud and personal benefit to the person committing the fraud. That's the statutory test. I see a yes, and a yes. I see a no, I see a yes. I see a yes. Okay, you guys, I'm really happy to see your answers. Here's the thing. I shaded the facts in this example to try to make Paul, look as bad as humanly possible. That's why I underlined lie, steal, misappropriate. If you're in a lawsuit, that's what the plaintiff's attorney is going to try to do. It's going to try to draw a story that says, this definitely rises to the level of fraud. This is lying, stealing, and cheating. And when you lie, cheat, and steal, you don't deserve the protections of an LLC. So that's the fact pattern I was trying to draw in this scenario. So based on the way that it's presented here, I'm thinking that this would rise to the level where you've got both elements. You've got LLC fraud, and the person committing the fraud is the one who's benefiting. So a judge could say, hey, you met the statutory requirements, right? So in Texas, it's under the statute. You have to meet both of these things to pierce the veil. It's not just willy-nilly. You need to show fraud, and you need to show the person committing the fraud was the one who benefited. But the way you prove it is it's a facts and circumstances sort of case. So in this case, I tried to draw a really nasty story. Let's look at another example. Excuse me. Leo is the member and manager in an LLC with investors. Leo, fabricates a business trip to Hawaii with and then he takes a bunch of girlfriends with him. It's really a vacation. There is no business activity whatsoever. Leo charges an exorbitant $300,000 to the LLC checking account and lies to his investors. He comes out and says, no, this was totally for business purposes. It's totally legitimate. I'm not using the money for nefarious purposes at all. Under this fact pattern, can the investors pierce the corporate veil to sue Leo? What do you guys think? I see a yes. I see a yes. I love that answer. Yes, comma, maybe. That is the perfect litigator's answer. Yes, maybe. Under this fact pattern, I was definitely trying to shade it to make Leo look like he's a liar and a fraudster, and he was definitely cheating his investors. The maybe, and this is where the litigator earns his money, is he's going to generate documents that says, oh, well, we really did talk about business here. He's going to try to rehabilitate Leo. He's going to say, oh, I really talked to investors. Here are my cell phone records. Here's meeting minutes to show that I talked about business stuff. I had pre-existing relationship with these girlfriends. They were potential clients. So, but under this fact pattern, I was really trying to shade it to show, hey, we've got both statutory requirements here. Leo's committing fraud with the LLC, and the fraud is benefiting him. So at least as to him, the corporate veil does not protect him. You can pierce it, and his investors can sue him personally to get his assets to make themselves whole. So your question might be, how do we protect against veil piercing? Because I really am not interested in having any of that. I set up an LLC to shield my assets, to keep them from being taken from me. I'm not interested in that. Because fraud and veil piercing comes down to a fact pattern, this is why your attorney and your accountants are always such nitpickers about creating good documentation. Because the plaintiff's attorney is going to rifle through all your paperwork and look for something to say, hey, here's a smoking gun. So if you've got all your corporate formalities set up properly, If you use LLC cash solely for business uses, you file your federal and Texas franchise returns on time. If you got multiple entities, you got to allocate the invoices to each entity properly. You don't use LLC money without an explanation. And if you use LLC money for vacation, you reimburse the LLC for the non-business purpose. Say it's 7 days, 1 day is for business, 6 days it's not. You pay back the LLC. So the LLC is only really paying that 1 day of business use, and then you email your bookkeeper so there's a paper trail. So I apologize as an accountant, as an attorney. There is a justification for having all this paperwork, all these records, is to document, hey, this LLC as a legal entity is separate from you, so therefore you should not be infected by its liabilities, and we have all the paperwork to show that we respected it as a separate entity and it was actually run as a separate entity. Okay. We are at 7:22. We are at 7:22. Okay. I did not get as far as I thought I would. I'm going to reserve the last 10 minutes or so for questions. Last 10 minutes or so for questions. If you guys have got any questions, I'd love to try to be a little helpful. And I may not be able to answer all your questions, so we've got an email address, so I'll flip to that email address. So you've got it on the screen for you. Okay. Let me type the email address for the firm. Oh, this is a very good question. I've got a very good question in the chat. It's the good question is, I heard that it's difficult to get loans from an LLC. Is that correct? And okay, the answer is it depends. And here's what it depends on, because I know that's a maddening answer. It depends on the banker that you're working with. Some banks are very familiar with LLCs and they understand how they work. Typically, when you get a loan for an LLC, the bank knows how an LLC works. They're really not interested in getting a charging order against you if you fail to pay. So typically, they will get a lien against the rental property, and they'll ask for a personal guarantee that binds your personal assets if you fail to pay the mortgage. So I think most of the national banks that I've worked out here in Lakeway, they're pretty familiar with LLCs. They're used to working with them. At this point, I've seen a lot of pushback from series LLCs. There's ways around that, but we didn't get to series LLCs yet. But typically, what I would do is I'd call the mortgage company and say, hey, you know, I want to do this with an LLC. Are you guys used to working with LLCs? Because if not, I'm going to go find somebody else. I see another question. I'm sorry. I'm just going as I see them. I saw a question. If I have an LLC, do I need an umbrella insurance policy? That's Alma. Okay, so I'm going to reveal my bias here, Alma. I really, really like umbrella insurance policies, and I'll tell you why. So I'm biased. Typical policies have limits, right? Your homeowner's insurance policy might be $200,000, $300,000 with a 1% deductible, right? Your auto insurance policy might have really low limits. They might be lower than you expect. I think $50,000, $100,000. You know, if you get into a car accident with an executive and he can't work and he makes $1 million a year, I do not want to be on the other end of that lawsuit. So typically what we like to do is put an umbrella insurance policy on top of your existing homeowners and auto policy so that you have higher limits, like $1 million limitation. At that point, when you have that high of a limit, you know, the plaintiff's just licking his chops at that point. He's going to say, you know what? I'll settle for policy limits. Let's just call it a day. Now, if you have an LLC, do I still need an umbrella policy? I would talk to your insurance agent. Personally, I like the idea of if it's not too expensive, and that's kind of the crux there is the insurance policy too expensive? If I can get really high limits on my rental policy and I'm concerned about my tenant or someone on that property suing me, if I can jump my policy limits from $250,000 to $1 million, it's only $20 extra a year, I think that's a good trade. That would help me sleep better at night. But that's kind of a judgment call. I'm biased. I like really high insurance limits, but sometimes they're expensive. So I understand how some people would say, I don't want to do it. Let's see, other questions. I hope that helps, Alma. Let's see, other questions. I see a question, can a trust own an LLC? Sir, you are anticipating a lot of the planning that we do here at the firm, is that oftentimes what we do is, that is one way to obscure who owns the LLC, because some asset protection strategies are built around not letting the plaintiffs or making it hard for the plaintiffs to see who owns what and the extent of your assets. So it's definitely possible. It's very common to have a revocable living trust own your LLC units, because then if one of the owners of the LLC dies, the trust spells out, hey, if person A dies, the LLC doesn't come grinding to a halt. There's another person who can run the LLC. And it's in a trust document that is not a public document. So yeah, definitely, that's a really good issue spotting right there. Bernadette, I see your question, Bernadette. So are there advantages to not having an LLC from a tax standpoint? Okay, so I'm going to reveal my bias here, is that I lay awake at night worrying about getting sued for owning a rental property. I lay awake at night thinking about, what if my tenants have a pool party and then someone slips and falls on the pool and is paralyzed? When you read about these cases long enough, that's what you see. And that kind of a judgment is crippling. That's millions of dollars right there. So it is technically true that there are less regulatory requirements when you own a rental property in your own name, because then you don't have to file a Texas franchise tax return. You don't have to file a public information report. Yeah, so there's less paperwork there. So you're saving a little bit of money on Texas franchise tax returns. But in my opinion, most people don't owe Texas franchise tax returns on their LLCs, because going from memory, I think the no tax threshold in Texas for an LLC is about $1 million of gross income before deductions. So I don't really see a compelling tax reason to own a rental property in your personal name, because you can set up the LLC so that it flows all the deductions to you as a disregarded entity. I'm sorry I can't give you I did talk a long time. I can't give you a more explicit answer than that, because that's later in the presentation. I hope that helps, Bernadette. Okay, you guys, I've got us at 7:30. 7:30. I really, really appreciate having you guys at this presentation. Now, here's our call to action. If you want to talk to someone about an LLC you set up with us, or you're thinking about, I really don't want to lose my personal assets because someone sued me for my rental property, I think you might be in a good spot to give us a call or schedule an appointment to talk to someone about setting up an LLC. Usually we do free consultations, so you can see if it works for you. I'm a little biased. I don't like being sued for my rental properties, so I like LLCs. I really hope that you guys got something out of this presentation. I was really happy to have you guys and all your responses during the presentation. So I hope this has been helpful. Please feel free to email us any questions you've got. If I didn't answer any of them, let me put the email address below. And I hope you guys have a great night. Hope you guys have a great night. Really glad to see you guys at the meeting tonight.